All right, good morning. Welcome to Win the Day live stream, where we talk about how to win the day as real estate agents and sales professionals. Today, we have Andrew Paul with us. He's a VA expert, and I'm pumped to hear what he has to say about this. Because as you know, there's a lot of VA folks out here. Matter of fact, there's a lot of people throughout the country that are veterans, and I just don't know that they are getting all the information they need to buy homes, to invest in real estate, to do all that. So I am pumped about this. Okay, so Andrew is are you a former Navy SEAL, or once a SEAL, always a SEAL? Navy SEAL. Okay. But he's also, he works for Benchmark Mortgage out of San Diego's branch manager, but he's licensed in 45 states. He works across the country. Very good. He's going to tell you more about what he does. He went to Vanderbilt, so you SEC people around here, you'll dial in on that. But he specializes in VA. He's got the passion to help these folks, and I think it's wonderful. So I'm just going to go ahead and turn Andrew over to y'all, and just tell us how you want it to operate. All right?
Yeah. Great. Well, John, thanks for having me on. I have a deep passion for serving the veteran community as a veteran myself. And so I'll just jump right into a little bit about my background and our agenda here for today. So if you want to, I don't know if my slides there. Okay, cool. So today we're going to talk about VA loans ultimately, and the goal, my goal for today is to empower you as a real estate agent community to be able to serve the veteran community. I'm going to hit high bullet points on topics that I think are extremely useful for you that you may not know about. And if we can just hold questions to the end, only because if we do Q&A like throughout, I'll only get through like a couple slides. So I'm going to hit a bunch of points. I'm going to hit them kind of quickly. Know that I can go much deeper in a lot of these topics. And if you want to, we'll go deeper into your specific questions at the end. But again, my goal today is to prepare you as an agent to represent buyers and sellers whenever that VA loan is involved, and to arm you with the knowledge that you can set yourself out apart from the competition and who is out there in the marketplace. Before I dive in, let me just give you a quick background about myself. My background, first of all, I grew up in a small town in New England, in Northampton, New Hampshire. So I don't know if any of you are originally from the New England area, but I grew up in an environment where almost everybody in my family served in the military. And so I like to kind of just share these pictures, because this is like where I come from, So this picture on the left is my picture of my grandfather, who was a B-17 pilot in World War II. And he was like the patriarch of our family. I've got this little news clipping here that you might be able to see. I obviously can't read it, but that is an old clipping we found after he died, talking about how by the time he was 21 years old, he had just finished flying his 50th combat bombing mission over the European theater. And just incredible, when I think about that generation and the shoulders that we stand on in this country. When our country was back against into a corner, that's the generation that stood up, and that's who was like, who I looked up to growing up. My uncles, cousins, everybody served in the military, and so somewhere along the line, I got it in my head that I'd probably go in the military as well, because that's everybody I knew, right? And now along the line, figure one day I would serve. Somewhere I got it in my head that I wanted to be a Navy SEAL, and I'm not exactly sure where that idea came from, because we didn't have any Navy SEALs in the family. So I'm pretty sure it's because I saw, this really awesome movie called Navy SEALs, the most realistic Navy SEAL movie ever. Saw Navy SEALs, was like, oh, that's it. I want to be like Charlie Sheen, right? I didn't want to jump out of planes. And then, as I got a little bit older and that sort of dream matured more into a calling, I knew that's what I wanted to do. I wanted to go into the SEAL teams, but I had no idea how to become a SEAL. And my dad, of course, my parents, they wanted me to go to college. And so typical of a teenager, button heads with his old man, all I wanted to do was enlist and become a SEAL. My parents wanted me to go to college. And so we had this little debate. Ended up going down and looking at this school called Vanderbilt University. And I'm sure a lot of you know Vanderbilt, if you're familiar with the SEC. And so I go down to Vanderbilt. I look at this school. I'll never forget. I'm doing a tour of the campus, and I walk into this huge auditorium, and it's, in this auditorium there's all these tables and booths set out around the outskirts of the room. And it's like, these are all the little clubs and extracurricular activities that you can join if you go to school here, right? And I don't want to be there, right? So I'm like, but as soon as I walk in, I see this guy standing there in uniform. And so I'm like, oh, what's that? I make a beeline over to his table. And right there on his table is this poster of a Navy SEAL. And you guys have all seen this poster because it's been used on the cover of movies and video games, right? It's got the guy who's got the full wetsuit on, right? He's coming up over the beach, fins slung over the wrist, automatic weapons, laser sight, getting ready to shoot something. And that's the poster. And I'm like, what club is this? And he's like, oh, well, this is ROTC. I was like, what's that? I mean, I had no idea. And he's like, oh, well, what it means is if you go to school here at Vanderbilt University, the Navy pays for you to go to college. And then afterwards, you just go in the Navy for 4 years to pay back the scholarship. And I was like, wow, that sounds like a pretty good deal. Now, a little detail that the recruiter left out was that they only take 16 guys a year from all of the ROTC units across the entire country to go to BUDS, Basic Underwater Demolition or SEAL training. And so, if any of you are listening are veterans or have family members, everybody who ever served in the military ultimately goes through a recruiter. And we all have our version of a recruiter story, and that's mine. So if you got kids or thinking about going to the military, you might want to be around when they're talking to the recruiter. It's sometimes a little light on details. But anyway, it all worked out for me. And before I go on, I just want to share that I'm super proud. This picture all the way to the right is my oldest son, Tristan, who is now active duty serving in the Marine Corps, and he's carrying on a proud tradition of service in our family. And I'm just so proud of him. So that's kind of a little bit about my background. Now just, the rest of the story is, I am a former Navy SEAL. And so in my senior year, I got selected. I got one of those 16 slots, and I was going to finally have a chance to go pursue this dream to become a SEAL. And just as I got my orders to go to report to Naval Special Warfare Center, Basic Underwater Demolition, SEAL training in Coronado, California, just as I got my orders, well, then this happened. And everything changed. I mean, the whole world stood still, and there isn't a group of people that I talk to that doesn't remember exactly where they were when this happened. Everything stopped, everything changed, and there was a tremendous amount of uncertainty in the world. And for me and my classmates, as we checked into BUDS, Basic Underwater Demolition or SEAL training, one thing was certain, that if we made it through training, no longer was this some cool dream of pursuing to become a SEAL. What it meant was we would be going to war. And everything we did had a new sense of purpose and passion. Everything mattered. Every detail mattered because it was real. And with that, I checked into, that was the backdrop. I checked into BUDS and began my journey to become a SEAL. And, when I talk about BUDS, it's, this is the thing you see on, the Discovery Channel, right? Guys running around with boats on their heads and carrying logs. And that's our selection process. Like my class started with 212 on what we call day one, week one. And ultimately we finished with only 16 originals from that 212. So obviously I made it through, became a SEAL, did several combat deployments to Iraq, which is a presentation for another day. Talk about the leadership experiences that my teammates and I learned on the battlefield and how they apply to the business world. But I did several combat deployments, had 2 kids born on 2 back-to-back deployments, including my oldest son, who I just mentioned in that previous couple of slides. And then after several combat deployments, I had to make a tough decision to transition into the business world. And from there, I left the SEAL teams and went right into the mortgage business because, that's a natural transition, right? Like jumping out of planes, blowing things up. I go do 30-year fixed mortgages. By the way, that was in 2007. So I don't know if any of you guys have been in the real estate business for a while and you remember what was going on in real estate around that time. Not a great time to be getting into mortgage and real estate. So needless to say, my transition from active duty was very challenging. So it's kind of another little passion of mine. If you know veterans who are transitioning from active duty to the civilian world, I am really passionate about helping set them up for success, for a successful transition. Mine was not successful, which is why I can speak to what you ought to do. Don't do what I did. But anyway, so I transitioned into the mortgage business, and there I was in the middle of a very challenging market. Not a whole lot of unlike what's going on now, right? And everybody I knew was in the military. So as I started doing loans, everybody I knew was in the military. I started doing VA loans. I started doing VA loans at a time when VA loans were not popular. And since that time, VA loans had this big resurgence. And the reason why is because back in those days, in the 2000s, there was a lot of easy financing alternatives that kind of made the VA loan a little bit irrelevant. And as that financing dried up with that collapse in 07, 08, 09 kind of time frame, here came this resurgence, this rebirth of the VA home loan program. So now let's dive into the material that I'm really here. That's my little bit about my background. So why VA loans? Why do we want to spend some time really rolling up our sleeves on this today? No, number one, I'm going to make a statement that I hope to prove to you by the time we're all said and done here today. But I think that VA loans are actually easier than conventional loans, and there's a number of reasons why for that. The other reason why we're going to talk about VA loans today is that VA loans are massively misunderstood in the marketplace. And there are so many myths and misconceptions about the home loan program, largely by real estate agents and lenders who don't do a whole lot of VA loans that give bad gouge to veterans, ultimately leading to veterans missing out on maximizing their VA benefit.
I can attest to that as a listing agent, and I see a VA loan come, it's like, oh. Right.
And my goal today is to turn that around. I hope that when you see a VA loan, you go, oh, cool. Because there's a couple of, I know, John, without you even saying, I know what your fears are about that VA loan. And we're going to talk about those today.
Perfect.
So it's massively misunderstood. We're going to get through that today. It's therefore an incredibly underserved community. It's a community that program is marginalized because of misinformation and misunderstanding by the so-called professionals in our community. And then the last reason why VA loans is, I think it's an incredible opportunity to serve those who have served. When one of the challenging things about transitioning from active duty to the business world, and I think this applies to anybody in any business you do, is finding the purpose and passion behind what you do. And for me, leaving the SEAL teams, doing a job that had a tremendous amount of purpose, to going and doing 30-year fixed mortgages, it's like, how do you get excited about that? And for me, that was being able to serve the veteran community. And I like to say that veterans have laid their life on the line to protect this country. They ought to be able to own a piece of it. So an incredible opportunity to serve those who have served and help them own a piece of the country that they swore to defend. All right, so let's dive in. What is a VA loan and what are some of the benefits? So I'm going to go kind of fast and furious here, but a little history about the VA loan. First of all, the VA loan was created in 1944 as an act of Congress to help returning war veterans buy homes. So it's been around for almost 80 years now. A key component of this is that the VA loan was created actually out of an act of Congress. So in a lot of ways, the guidelines don't change very much because, I don't know, you ever seen Congress get anything done efficiently? No. So now the nuances of the guidelines are run by the Department of Veterans Administration, but the program itself, the law that created the program, is an act of Congress. And in that sense, the fundamentals of the VA home loan benefit have not changed in 80 years. Now, mentioned a little bit earlier, huge resurgence of VA loans, in the 2000s because of that early alternative, easy financing. And now another reason why there's been a resurgence, I would say, is that because many years ago, like in the 90s and before, the VA actually did the loans, but that's not the case anymore. So this is an important distinction to make, that the VA doesn't do loans. Now, again, I'm going to go very quickly here. There are rare cases where the VA does do a loan, but it's so rare, I almost guarantee none of you have ever been in that situation. 99.999999% of the time, The VA does not do the loan. The way the VA loan program works is that the VA loan is done by a bank. And then the VA simply insures or guarantees that loan. So the VA is not involved in the loan process except for in very rare circumstances. So to that point,
can I ask, do every banks then do VAs?
If they're approved, they have to be approved with the VA, but essentially, yes. And that's also kind of where we get a little bit of a problem, because pretty much any licensed loan officer can do a VA loan, but how many have they done? And that's kind of one of the points I'll touch on here in a few moments.
Sure.
So this is a key point, just a talking point, just to be aware. The VA doesn't do loans. The loan is done by a bank, and then the VA guarantees the loan. And how much do they guarantee the loan for? They guarantee the loan for 25% of the loan amount or the value of the property. And that's just a nuance. I'll just say they provide a 25% guarantee. That's the simplest way to say it for now. And by the way, that's why, the VA loans have some of the best interest rates, because normally a bank would not loan somebody 100% of the value of a property, right? They want you to put some money down. But from the bank's perspective, when they do a VA loan, even if somebody buys a house, say for $100,000, and they loan them all $100,000, the bank's risk or exposure is only $75,000, because the VA is guaranteeing 25% of that. So it's almost as if the veteran has put down 25%. All right. Okay. Next kind of point. So key, what are the benefits of the VA loan? Everybody kind of knows this, but hey, 100% financing, right? No money, no down payment requirement. And that's, that's the one everybody kind of knows that. Now, here's a key point, that misconception. There is no limit to the VA loan anymore. That means that if you have never used your VA loan, if you don't have any current VA loans, we'll dive into some of those nuances later on. You can buy a house for $10 million and get a loan for $10 million, 100% financing, assuming you can afford the payments. Okay. So the point is that there is no VA loan limit anymore. That went away in 2020, but there are still people who think that there's a VA loan limit. And I understand there's a little, some people don't know that because they just haven't done any training. But there are cases, which we'll get into, where there are some limitations that come into play. But for a service member who's never used their VA loan, zero limit to how much they can borrow on the VA loan. Another key benefit, no monthly mortgage insurance. So unlike a conventional loan or an FHA loan, there is no MI, no private mortgage insurance, no monthly mortgage insurance. However, the VA does have, in lieu of a monthly mortgage insurance, they have an upfront fee called the VA funding fee. And that VA funding fee is what pays for the VA home loan program. I like to tell people what that means is that the VA home loan benefit is not a taxpayer funded program. It's paid for by the veterans. Whenever we get a VA loan, we pay this funding fee. That's what pays for the program. And I can go into more detail on how much it is, but here's the key point for you. The VA funding fee is the only fee that can actually be rolled into and on top of the loan. So the VA funding fee is rolled into the loan, not paid out of pocket. They can pay it out of pocket if they want to, but it's rolled in so they don't have to come up with it. And it can actually be rolled into on top of the loan. Okay. Again, some misconceptions.
So no money down.
No money down. No money down. Now, closing costs, you still got to come up with closing costs. We'll talk about that on a separate slide. But the funding fee can be rolled in. Now, cool key benefit. The funding fee is waived if you have a disability rating. And again, there's some details and nuances here, but for simplicity, I'm just going to say that the funding fee is waived if you have a 10% disability rating or greater. Also new for 2020 and beyond, active duty service members currently serving who have a Purple Heart are also exempt from paying that funding fee. Why? Because, well, we know as soon as they're out, they'll have a disability rating because they have a Purple Heart. There's now a couple of cool other key benefits. Unlike other programs, there's no reserve requirements. So, some FHA conventional loans may require that you have a certain amount of money in the bank post-closing for reserves, for rainy day. VA has no reserve requirements if you're buying just a single family house or condo for you to live in. There are no prepayment penalties. This has always been the case with VA. Nowadays, there's no prepayment penalties on typical consumer, financing, but this has always been the case with VA. And then there's a 15-day grace period, to assist veterans who are struggling or whatever. Like, there's no late fee for 15 days.
Nice.
Excuse me.
Bless you.
Okay. Now, this is probably my favorite couple of slides here. So what I call my myths and misconceptions slides. So I want you to think about, especially when we get to this Q&A section, what are your war stories? What have you heard? What BS have people told you? Oh, you can't do this with the VA, or the VA requires that. I mean, we're going to blow those out of the water right now. This is like the meat and potatoes right now. This is like the biggest misunderstandings that I see. And I want to know, if I haven't covered it here, if you've got a misunderstanding that I don't hit here, I want to know about it. Number one, there's no credit score requirement. The VA has no credit score requirement. Okay, there's a little caveat. It's true, the VA has no credit. What does the VA require? The VA does require that lenders pull a credit report and analyze the payment history of the veteran. That's true. But there's nothing in the VA guidelines that requires the veteran has a certain score. Caveat here. What did I say earlier? The VA doesn't do loans, right? Banks do loans.
Yeah.
So banks have credit score requirements, and your credit score still indicates your level of risk. So it's still true that the higher your score, the better the rate you get. But technically speaking, the VA has no credit score requirement. So technically, any credit score requirement by a lender is what we in the lending business call an overlay. So you've heard that term before. I'm going to give you a term, overlay. That's an additional requirement overlaid on top of the core requirements of the VA. But at the core, the VA has no credit score requirement. The reason I want to take a moment to talk about this is because most real estate agents and most veterans and even lenders out there, they don't know the difference between the VA's requirements and then their bank's additional overlay requirements. And so a veteran may walk into a large credit union that serves a lot of people in the Navy, and they may be told, oh, I'm sorry, your credit score is only a 640. You can't get a VA loan. And that's not the whole sentence. But they stop there. So the veteran walks out thinking, oh, I can't get a VA loan. No, it just means that veteran can't get a VA loan at that particular credit union because they have a minimum credit score requirement.
Mm-hmm.
And so what happens is a lot of loan officers and a lot of real estate agents, your understanding of the VA loan is through the lens of these overlays. So that's important to understand that distinction. So there's no credit score requirement.
That's vital. Really, that is a major, major point.
Yeah, it's huge. What it means is that if you have a veteran client who's being told no,
yeah,
give me a call because we
Yeah.
might be able to help them. Just because they can't do it doesn't mean that it can't be done.
right on.
All right, next common. Oh, I can't reuse my VA loan. I don't know how this one is still around and out there, but there is this misconception that the VA loan is like one and done. Oh, I used my VA loan. Nope, you can reuse your VA loan over and over and over again. I have some clients that I've done 5 and 6 VA loans for. The next is very common misconception is that people think that they can't have more than one VA loan at a time. And that's also not true. You can actually have more than one VA loan. Now, when you get into having more than one VA loan, there are some limitations that come into play. And we can dive into those details later. But what I want you to know as a real estate agent is if you're talking to a client, to a veteran, and you say, oh, have you ever thought about using your VA loan? And they say, oh, I already used my VA loan on my property in Virginia. Be like, well, you can use it again. Or, well, did you know you can have more than one VA loan at a time? And they may go, I didn't know that. Well, yeah, well, what? Let's work out the numbers and figure out what you can do. So subject to some limitations, I'm not going to get into those in the weeds right now, but you can use the VA loan over and over again, and you can have more than one VA loan at a time. Another very common misconception important for you as agents, people somehow think that the seller has to pay the veteran's closing costs. And that comes out of a misunderstanding around what the VA calls non-allowables. We'll talk about that in a few minutes, but that's not true. The seller does not have to pay the closing costs of a veteran.
This one comes up a lot in our world.
Comes up a lot. And so, John, for you, that's one of the reasons when you go, oh, here comes a VA loan. The first part where people kind of go, they go, oh, is this going to cost my seller more money if I accept a VA loan? The answer is no. The VA does not require that the seller pay anything more than any other transaction.
Yeah, that's a big one.
This is simply not true. Okay, so again, let's go into details in Q&A. So if you have a situation like that, like let's talk about it and we'll sort through the details. But the seller does not have to pay the closing costs of a veteran. A veteran may need help with their closing costs. That's different. That's a negotiation. That's different than, oh, the VA requires this. No, the VA doesn't require that. Next, VA loans take too long to close. Not true. I mean, there are some very big lending institutions that just can't get out of their own way. They're a big quagmire of red tape, and they probably do take 45 days to close a VA loan. We close VA loans in 21 days, 17 days, no problem. Not true that VA loans take too long to close. Remember, VA doesn't do loans. Who does the loans? Banks do loans. So what's your experience with the VA loan? Your entire experience with the VA loan is through the lens of your interaction with another lending institution or a loan officer who may not be a real pro. And so that loan took too long to close because they didn't do all their work up front, or they weren't organized or whatever the case may be. Next, VA appraisers bring values in low. Nothing could be further from the truth. First of all, this is a key point. VA appraisers are not some special government employee. VA appraisers are regular appraisers who simply sign up with the VA to get orders, just to get business. So they open up their email one day and they got 2 orders from the VA. They got 3 orders from this bank, 2 orders from that bank. When they show up to your house to do a VA appraisal, when they get finished, they're driving down the street and they're going to go do an appraisal for a conventional loan. Their VA appraisers are regular appraisers, and VA appraisers have to follow the same guidelines that all appraisers follow on every appraisal that they do, which is the USPAP manual, which gives all the guidelines of how appraisers conduct their business on assessing value. VA appraisers are no different. By the way, you ever had a appraisal on a conventional loan come in low? Of course. The VA has no interest or desire in having appraisers bring values in low. They know when that happens, deals fall apart, and now veterans got to go find another property, maybe a risk of losing their deposit. It's in nobody's best interest for appraisals to come in low, and VA appraisers are no different than any other appraiser. Next, VA requires too many repairs. Common misconception. We can dive into this in more detail.
That's another big one here.
Yep. Look, VA, but there's misconceptions around this, and I'll just say it like this for sake of brevity. Look, the VA does have what we call MPRs, minimum property requirements, and what that means is that the VA wants the house that the veteran moves into to be these 3 things: safe, sound, and sanitary.
Fair.
So if you fall under those 3 categories, what are some examples of that? Very quickly, I'll say VA appraisers are not home inspectors. They're not licensed contractors, but they've been trained to look for certain things, but they can only identify what they see visually. So if an appraiser walks in the front door of a house and they look up on the ceiling and they see a big water stain on the ceiling, what is that probably indicative of? Could be indicative of a leaking roof. And so they're trained to say, hey, I see a stain on the ceiling. And if they've done their job correctly, they'll put in the report, licensed contractor or licensed roofer to confirm that the roof doesn't leak. By the way, if you have a leaking roof, that's a problem for a conventional loan. Got a foundation issue? That's a problem. What are some of the little weird nuances? They don't want any holes in the drywall. Okay. They don't want any people punching holes in the wall. They don't want, wires dangling from the ceiling where the chandelier used to be. That could be a live wire. I don't know if I'm going to get electrocuted. They don't want broken windows, and they don't want peeling paint. That's a kind of a very unique VA one, but it's easily solvable. They just don't want peeling paint because paint is a protective coating for the wood. If you got peeling paint, that creates water intrusion. So VA has a couple of little things like that, but none of them are major, to be honest with you. Every time I really, when I go into the details of MPRs and things like that, people are like, oh, this is no factor. But that's one of the myths and misconceptions. Next, again, I already talked about this. There's no maximum loan amount. Again, that's an old thing. There's only a maximum guarantee. Next, now, quick nuance on this. This only applies in the case of multiple loans. And I'll just say it like this. In Escambia County, down in Pensacola, where you guys are, you are subject to the conforming limit of 2025, which is 806,500. That only applies if you have more than one VA loan, right? So if I'm a veteran and I currently do not have a VA loan, I can buy a house in Pensacola for 1.5 million, zero down, no problem. If I have a current VA loan, say in Virginia, and I'm moving to Pensacola, and I want to keep that house in Virginia, now I have a limit to do a calculation on, and I have to use the Escambia County limit of 806,500. That county limit is different in different counties. Like where I live in San Diego, the county limit is much higher because it's a higher cost of living. So they've got this higher limit that allows you to have a larger second VA loan. Okay. I'm not going to go into those details, but I do admit that's where some of the confusion comes up about loan limits. The loan limit concept only applies if you have multiple VA loans at the same time. I'm just going to leave it right there. All right. What's useful for you as an agent? Like, who's eligible for a VA loan? Well, active duty service members with 90 days of service. So, you can be 18 years old, you enlist, and after 90 days, you're eligible for a VA loan. That's it. That's what it takes to have earned the benefit.
Andrew, you have any idea how many people that is running around the U.S. right now? Just curious.
Millions.
Interesting.
Yeah. Oh, millions. I think we have, 440,000 Army personnel, like 423 Navy personnel, like 183,000. That's just active duty, So
it's a big market, is my point.
It's huge. Yeah. And especially where you guys are too, and where I am and things like that. So active duty service members with 90 days of service. Next, veterans discharged from service under conditions other than dishonorable. So, you serve for, a couple of years. Obviously, you've hit that 90-day mark and you get out. As long as you're not dishonorably discharged. You get dishonorably discharged, you lose the benefit. Okay. National Guard. This is where it's a little bit different. National Guard or reserve members who have never served on active duty need to have 6 years in the Guard or reserve, 6 good years of service. That, what I just said, means something to people in the reserves. They'll know what that means. You have to have 6 good years. After 6 good years, you've now earned the benefit. Now, let's say you're a reservist or a National Guardsman and you've been in for 2 years and you get called up to active duty. You get activated. Once you've hit 90 days on activation, boom, you're eligible for the VA loan because you've now served 90 days on active duty. Okay, so 6 years in the Guard if you just never get activated. But if you get activated for 90 days or more, boom, you've now earned the benefit as well. Now, this is huge. This is a huge one. The unremarried spouse of a veteran who died in service or from a service-connected disability. How many widows are out there? Their service member is gone. They can still use the VA benefit of their deceased service member.
Is this forever? Does it expire?
Never expires, but he is unremarried spouse. Now, there's an exception if you're over a certain age.
Right.
If you're over a certain age, you can remarry and still get the benefit. But, so it's not like, I'm 30 years old, my husband died. If you get remarried, it's gone. But if you're like in your 60s, you can remarry and you still have it. So there's an exception for over a certain age. But essentially, the reason I share this with you is like you could be in somebody's living room and there's a widow and she's trying to get housing. She's
Mhm.
in her 60s, and you kind of look over and you see this old picture of a guy in uniform. You're like, oh, tell me. He's like, oh, that was my husband. He served in Vietnam. You're like, you might be able to use a VA loan and buy a house with 0 down. So this is what the kind of stuff I want to arm you guys with. That nuance right there, that's a great conversation piece. You could be serving somebody who's struggling to find housing in their 60s or 70s. They're widowed and by themselves. They may be able to use a VA loan from their deceased spouse, right? So especially if they died, if they died either in service or from a service-connected disability. Some nuances on that, believe me, but I just want you to have the conversation point. What I'm trying to arm you with are little bullet points, little things that get your ears to perk up when you're interacting with people. And then, then you get them to me, and we'll dive into the details and figure out whether they're eligible. And then other kind of an eye chart here, but just there's a whole bunch of other weird nuances where public health servants and certain cases of cadets during certain times of World War II, this is an almost never situation, but it's in the kind of fine print of who's eligible VA. So I'm just going to blow through that. Next, who can go on the loan? Very important. Obviously, a veteran by themselves. And a veteran and another veteran. Okay, so 2 veterans can team up together and both use entitlement and buy a house together. They both have to occupy it. Okay. The other thing, so that's useful if you got a young veteran who can't qualify on his own. Maybe they team up with a buddy who's a veteran, who's active duty, and they both buy a place together. A veteran, and when I say veteran, I mean veteran or active duty service member and a legally married spouse. I use that language very intentionally. So a veteran and their spouse. Okay, and so that's it. And the way that works is because I for years before different legal stuff kind of came through, I would have some same-sex marriage cases where people would say, and VA for a while did not recognize same-sex marriages. They do now, and so if you have a veteran who's in a same-sex marriage, if they're a veteran and they say that's my husband or that's my wife, like that's it. There's no further questions. If they assert that they're married, then they're married, and that person can go on the VA loan with them. Again, the unremarried widow of a veteran, as I just mentioned. Now, key point here is that VA purchases, they have to be owner occupied. All right. All right. And I can already tell I'm starting to run out of time, so I'm going to go a little even faster. Pitfalls of the pre-quals, I like to call them. I just want to kind of point out a key difference here. A lot of times when you're working with an active duty service member or veteran, and they go, there's this term that gets interchangeably used incorrectly in the mortgage industry. And I want you to understand the difference between a pre-qualification and a pre-approval. Most loan officers do a pre-qual. That can include pulling a credit report, but they're not actually verifying paperwork. They're not actually verifying entitlement or eligibility. What we do is we do a full pre-approval on every buyer, and that is extremely important. So this is the pitfalls. If you only do a pre-qual, you miss out on important details that can blow up your loan halfway through. This is why deals don't close, because all of the little details aren't worked out before you write an offer. So what are some of those pitfalls? Well, here's a huge one. A lot of loan officers who don't do a lot of VA loans, they don't pull the veteran's certificate of eligibility. Any lender who is approved with a VA can pull a veteran's certificate of eligibility in minutes. And that, if you don't have a certificate of eligibility, which is issued by the VA, you don't have a VA loan. The number of times I have had agents call me and go, hey, we're falling out. They don't have a certificate of eligibility. And it turns out the veteran was dishonorably discharged, and the loan officer didn't log into the VA portal and pull that COE or certificate of eligibility. Turns out they weren't eligible. Right. So there's a difference between being eligible for the VA loan, which we talked about earlier, and then qualifying. Qualifying has to do with your credit, your income, your assets. Can you afford the payment? Eligibility has to do with your time in service. Have you earned the benefit? So the certificate of eligibility is essentially the verification of that benefit. It's easy. And 90% of lenders don't do it up front as part of their pre-approval. And one of the things that we often find when that happens is we find unrestored entitlement, meaning someone had a VA loan in the past, they sold it, and they never went through the process of getting their benefits sort of restored with the VA. And now all of a sudden this is coming up 3 weeks into the process or a week before closing, and now you're jumping through hoops to find an old closing disclosure and apply to the VA to have the entitlement restored. This is easy to do up front, and a lot of times it's done. So that's a pitfall of doing only a pre-qual instead of a full pre-approval. Missing debts and obligations. So for example, VA requires that in a community property state that we have to consider the debts of a spouse, even if the spouse is not going on the loan. And look, Florida is not one of those states, but there are, and for the most part on the East Coast, most of those states are not community property states, but it's something you have to know about. So if you don't know that, right, then that's easy to miss. Another one, this is unique to the VA. The VA requires that we consider if you have childcare expenses. It's the only loan that requires this. So on every single one of my VA buyers, I go, hey, do you have any school-aged children? Yes, I got 2 kids, 3 and 5. Great. Do you have any childcare expenses? No, my wife stays home with the kids. She doesn't work. Okay, cool. Oh, yes, we do. Me and my wife, we both work, and so the kids go to daycare. How much is that per month? $1,200 a month. Guess what? We have to count that $1,200 as if it was like a car payment, like any other monthly debt.
Sure.
And if you miss out on that, you blow up your loan. So residual income, unique nuance to the VA loan. I'm not going to go into details on this. This is also kind of important misconception. A lot of people who are out, they're using their GI Bill, post 9/11 GI Bill, Montgomery GI Bill education benefits because they're getting a stipend. That money that they get on a monthly basis when they're going to school is ineligible to be counted as income. Okay, just FYI. Also, here's another big deal. This is why a lot of your buyers may get turned down and think they can't qualify for a VA loan. Every lender that does a VA loan will run the loan situation scenario through an AUS, an automated underwriting system. Every single one. It's called DU or LP, right? Fannie Freddie system that analyzes all these data points, et cetera. There are a lot of lenders out there. So that system essentially comes back with an answer of thumbs up or thumbs down. Okay, approve or refer is essentially the answer you get back from this automated system. There are a lot of banks that will not do a VA loan if the automated system does not say yes or thumbs up. But that's not the end of the story. I mean, if it says refer or thumbs down, it's more like a thumb sideways. Okay, it's considered a manual underwrite. And so it means you do not have an automated approval. You have to manually underwrite this loan, which we do on every loan anyway. But so, for example, we will do a VA loan on a manual underwrite. Do it all the time. But believe it or not, there's a lot of big banks and institutions that will not do a VA loan. So that could be a reason why your client all of a sudden gets turned down.
By default, they're just saying, no, you didn't make it. Sorry.
Yeah, if the system doesn't say yes, they're not willing to do a manual underwrite. Yep. Okay, a couple more quick ones here. Very important here for you to understand a veteran or especially an active duty service member. Every enlisted active duty service member write on their LES, which is a pay stub. That's the military term for a pay stub, leave and earning statement, has an EAOS or an ETS date. That's when they're getting out of the military. And unfortunately, it's right there on their pay stub or their LES. There's no other job in the world where you have a pay stub where it says this is the day your job ends, right? But in the military, it's right on that LES. And so if an active duty service member is getting off of active duty within the next 12 months, then essentially what that means is that their income, we know it's ending. So how are they going to make their payment 10 months from now or 6 months from now? And a lot of loan officers or lenders miss this on the pre-approval. Now, there is a way around it. If a person's ETS, and I say EAOS or ETS, and I'm throwing out military terms to you here because different services call it something different, but it's when they're leaving active duty. Now, there's a way around this. Let's say I'm an active duty service member and my EAOS or ETS date is, June of this year. Then as it stands right now, my income is ending and I won't be able to make a payment come July, right? Because I don't have a job lined up. However, we can still do a loan for that person if the following two things are satisfied. If they are eligible to reenlist, so we have to verify with the command that they're eligible to reenlist, and then they simply sign a letter of explanation to us saying that they intend to reenlist. And then we can still do a loan for them. But again, this is one of these things that come up, like, unfortunately, with other lenders, like, you know, a week before closing or something, and you're like, oh, now you're scrambling, and now, or you may not even have a loan. They may be like, well, no, I'm not reenlisting. I've had a situation where I was like, hey, no problem, as long as you're eligible to reenlist. And goes, well, actually, I'm on a med hold. I'm not eligible to reenlist. Cool, can't get a loan. All right. Recently discharged veterans, very common. I see guys get out and then they go and they become self-employed, like they become a real estate agent. And so if you're self-employed, you go from employed W-2 wage earner to self-employed. You're an independent contractor of some kind. You have to have a 2-year history of self-employed history to count that income.
That's everyone.
That's everyone. That's every loan, right? Yep. But you know, like I'll have like former Navy SEAL friends of mine who all of a sudden they're a Navy SEAL on active duty, they're a wage earner essentially, right? And then all of a sudden they get hired by some company doing contract work.
Mm-hmm.
They're doing the exact same job, but now they're an independent contractor. They're not an employee. They need a 2-year history. Condos, very quickly, just want to mention to you, I don't know if you do a lot of condos around there.
A lot of condos.
Okay, so it's a big deal then for you. So condos have to be VA approved condos. And there's a list, you can search it. It's hard to search it. I can help you with that. But what I say to my veterans is like, hey, if you're thinking about buying a condo, what you have to know is that not every condo is on the menu, because not every condo is approved by the VA. Now, it's not hard to get a condo approved, but I'm probably one of like 24 lenders or loan officers who know how to do that. And we have to gather up the condo association paperwork, the minutes, the bylaws, the budgets. We put the whole package together, and it takes about, if you know what you're doing, it takes about 10 days to 2 weeks.
Mm-hmm.
And I've done this, guys, I've done this hundreds, not a couple. I've done this hundreds of times where I've helped agents. Oh, my veteran wants to buy that condo. It's not VA approved. No problem. We'll get it approved. And we get it approved, and they get to buy that house and use their VA loan. In rare cases, there's nothing in this for me other than to help you. So I can't really just do this all the time. But I've helped listing agents get a condo VA approved because they've got a VA buyer. So they'll refer that VA buyer to me, and I'll get that condo approved.
But once it's approved, it's approved.
It's approved. That's correct. Yes. Big deal. And a cool nuance is that if it's on the VA approved list, that's it. There's no further question or discussion. On a conventional loan, if you're buying a house or buying a condo, you have to get a condo certification questionnaire, and they got to answer all these questions, and you may find out that there's some disqualifying circumstance. Not the case with VA. And VA recognizes a little bit of a weak spot because they like review a condo, and then it could be 10 years later. They don't know what's going on with that thing anymore. But if it's approved, it's approved. So I would say that's why it's an advantage. If a veteran wants to buy the dang place and it's VA approved, that's it.
The billing is approved, not the person, right? So it's the next person's fine. That's
exactly right. Yep. Couple key things, key questions to know and ask by your clients. Hey, very common with veterans is are you guys using a power of attorney? Are you getting ready to be deployed anytime soon? Are you going to be out on a ship underway during closing? The number of people who go under contract and then leave, I'm like, oh my God, like this is when you're buying a house, like when you're leaving, but it happens. And if you don't work with a lot of veterans, you don't think to ask this question. And it's a problem because you got to get a power of attorney. It's got to be approved, et cetera, et cetera. So, and then using rental income to qualify, you can buy a multi-unit property. This is kind of cool. You can buy a 2, 3, 4 unit property with a VA loan. And you can use the rental income to help them qualify. This is where you do have to have some reserve requirements, and you have to either have some management experience if you want to use that rental income to qualify, or a satisfactory substitute is to have it managed by you or by a property manager.
Is that the same as a DSCR loan then?
It is not at all.
Oh, really?
Buy a VA. You can just buy a multi-unit property with a VA loan, and they can use the rental income from the other units to help cover the payment and qualify. Yep. Last couple things I want to talk about. Every VA loan requires that we have the what we call the VA amendment to contract. These days, I mean, again, I'm in 45 states, so I see every kind of contract and versions of contracts you could imagine. Most states and associations have the language in there now. But the bottom line is that this language has to be in the contract before we can close. Most contracts are including it up front now, so it's not a big deal. Okay, let's talk about writing the offer really quickly. Getting a seller credit. A lot of veterans do need help with closing costs. How much can you get? I'll just quickly say 4%. Yeah, it's different numbers for conventional and FHA. With VA, it's 4% max seller concession. But there's an important nuance here. The 4% is defined as anything of value, and that 4% cap excludes allowable closing costs. So a lot of people will just kind of very simply say, oh, it's 4%. So if you have a $200,000 purchase price, $8,000. No. It's 4% plus allowable closing costs.
Oh, cool.
But most of the time, I never have to get into separating those two things out. Usually, if 4% is plenty of 4%, but it's actually more than 4%. I'll just leave it at that. Look, contract dependent where you write it in, but this is my advice to you as agents for doing this for 18 years. Don't write it as a percentage. Write it as a fixed dollar amount. You're competing with other offers. You're competing with a listing agent who maybe is not super sharp. Like, don't make listing agents and sellers do math. Well, 286, and now we're countered back at 292, and now we're at 270. Now I'm trying to do percentages. Just put a fixed dollar amount in, right? So my recommendation is that you write and you use this language: seller to credit, and then put a dollar amount, $8,000, $10,000 to buyer for recurring, non-recurring, and VA non-allowable fees. And if you want to add one more cool thing, you can add and debt, because unlike any other loan, the VA allows the veteran to use the seller credit to pay off debts that they have if they want to. You can use it for more than just closing.
That's pretty cool.
It is very cool. Big update for 2024 and now 2025, because I know you guys burning question. The veteran is allowed to pay your realtor fees now. Okay.
Right.
And the realtor fees that you guys pay, and however, if the seller is paying your commission, like kind of how it's always been for the last however long, that is not included in the 4%. Okay. So it does not eat away at the 4%. That's kept separate like it always has been. Yeah, so there you go. Seller paid realtor fees do not count towards that 4% cap. WPA, wood destroying pest addendum. This is handled differently in different states. VA requires that you have a termite clearance, essentially. Okay, so if you probably want to negotiate and talk about that up front. Okay, because you don't want that to be a surprise down the road. I'm just going to blow through this. I want to talk about property condition and value, because this is, I think, really valuable to you. All the time I get, again, concerns about, is the appraisal going to come in low? Here's the cool thing about VA. Unlike any other program out there, there are two tools we have that we don't have with any other loan program. Number one is called the Tidewater Initiative. If you've never heard of that, if you've ever had a VA loan appraisal come in low and you have not heard of the Tidewater Initiative, it's because you were working with somebody who wasn't representing you very well. The Tidewater Initiative is this: when the VA appraiser is doing an appraisal, if as they are about to finish that appraisal report, if the value that they are going to come to is below the purchase price, they have to stop and issue the Tidewater notification. And now we collectively, you, me, all of us together, we have 48 hours to provide to that appraiser any additional information for them to consider that they may not already know. That can include additional comparables to consider. It could include, work that was done on the property to build it up. It could be something unique, like, hey, hey, this property, 3 doors down that sold for really low, that was a distressed sale. You may not know that, but I happen to know that the seller was, a widow situation or a divorce situation. Appraiser may not know that.
This is a misconception because I see Tidewater. It's like, oh crap, we're dead.
Oh,
it
gosh.
just means we got more work to do.
But here's what it is. On a conventional and on an FHA deal, appraisal just comes in low. Yeah. Here you go. On VA, you have a chance.
Yeah.
I'm batting about 65% that after Tidewater, after we provide information back, it comes in at value.
Yeah, it's not an adversarial relationship.
Yeah, that's right. And now let's say we do Tidewater and the appraisal still comes in a little bit low. We still got another trick up our sleeve called the reconsideration of value. And what that means is that, again, unlike any other loan, the VA in their sole discretion can go in with their magic wand and go, nope, value is up to here. It's called we ask the VA to do a reconsideration of the value. We ask them to consider these additional data points. We think the appraiser is off the mark. And the VA can so let's say it's a $400,000 purchase price, appraisal comes in at $395. VA can go, yeah, we agree with you. It's $400. That's it. They don't do another appraisal. They just look at it and they go, oh, sales price is $400, came in at $395. They go, yeah, $400. Here you go.
So important not to give up. Get in there and fight for the darn thing.
100%. Now, the reason why most of you have never heard of any of these things is because most of the time you're dealing with a big bank and they don't take the time to go to you with the Tidewater initiative, get us the comps back or additional information. They're just on to the next one. They don't bother going through.
Huge benefit to be able to fight that.
Huge. And I'm batting probably 75% with reconsideration of values. And VA, when you do an ROV, will never lower the value. They'll only come up. So you got nothing to lose. Nothing to lose. Okay. And look, at that point, I kind of already talked about MPRs, house being safe, sound, and sanitary. Talked about the pest inspection briefly. You do need Section 1 clearance, absolutely required, or active infestation. And with that, I kind of went a little bit long. I'm going to give you a couple things here. How do you get the advantage? Utilizing me to get condos approved. Since we do full pre-approval, we can close in 21 days. Be aware that if your veteran clients are working with some of these other big banks, big names out there, those organizations will try to steer your clients to other agents. So just be aware of that. And with that, I'll say I'm licensed in 45 states. So I'd love to help you and any clients wherever they may be going. And I'll call listing agents. I'm probably, after I'm done, John, you were like at the beginning of this, you were like, man, when I see a VA come over, sometimes I'm a little concerned. When you write an offer, I will call the listing agent. By the time I'm done talking to that listing agent and I've answered all their questions that they didn't know about VA, they are in their comfort zone. They know that this veteran's qualified and pre-approved. They know that I know what I'm doing. And now, all else being equal, your veteran's got a real shot at getting their offer accepted.
So my understanding of that, Andrew, is the way you should operate this is don't try to be the expert. Get enough information, get them to Andrew, and let him do his thing. Is that fair?
That's fair. And so last slide up here is my contact information. There's my cell phone. That's my preferred way that you call or text me. My email is there. If you put your phone over that little QR code, you can download all of my contact information. And if you email me asking for it, I will give you every single one of the slides in this presentation. I'll email it back to you. So reach out to me and I'll email you these slides. And with that, what questions do you have?
You guys have any right out there? I got a ton, but you guys got any right out
there? That was awesome, Andrew. Thank you.
Oh, fantastic. Fantastic.
I had a question.
What do you got, Destiny?
Well, I was going to say, you were talking about the multi-unit properties. Does the VA member have to occupy one of those?
Yes, they got to occupy just one of the units.
Okay.
And,
for how long?
Good question. The requirement when you use a VA loan, it's about intent to occupy. Okay, so your intent has to be that you intend to occupy this house for 1 year. Now, it's not a prison sentence. and things can change. Now, I want to be clear here because I've had guys active duty, like we buy a house and 6 months later they get orders to, someplace else, and they call me like, oh my God. I'm like, no, bro. I go, you got orders. Like, that's not like you lied. When you bought the house, you intended to occupy it, right? So now, if you buy a house and you move into it for 2 weeks, you go, I moved into it, now I'm moving out. It's like, okay, come on. Just imagine for a moment.
Right.
You're in front of your honor.
Yep.
Can you explain yourself?
What are you going to say?
Yeah. If you can say, listen, when I bought it, I intended to live in it for a year. I moved into it. Dude, I've had young guys buy a condo 3 months later. They met the girl of their dreams at the strip club, and they're in love. Right? I mean, and they're like, and she's got 3 kids already, so we can't move into the condo. So we're moving into her house, or we're moving in. I'm like, yeah, dude, your life circumstances have changed. Like, when you bought the house, as far as you knew, you intended to occupy it. You've met the requirement.
So when you say you can have 2 loans, not at the same time,
you
can't. You're be living in one. How does that work? I can't live in 2 places at the same time.
No. So, great distinction there, John. So when it only has to be owner occupied at the time that you buy it. So for example, I'm stationed in Virginia. I buy a house there using my VA loan. A couple years later, I get orders to Pensacola. I want to keep the house in Virginia. I still have some VA benefit remaining. Now I'm in Pensacola. I want to buy a house there. When I buy that, I'm moving into it. It's going to be my primary residence. That's okay. I'm allowed to move out of the house in Virginia and buy now the Pensacola.
And keep the other one as an investment property.
Yeah, absolutely.
Can I do that within the same area? Say I live in Destin and I live in it a year, and then I want to get another home. I'm not transferring out of the area, but maybe life circumstances, I need a bigger house.
The answer is yes. The short answer is yes. I mean, like, an underwriter still it's got to pass the sniff test. So like, if you're buying the house across the street, it's gonna be like, but if you're like, hey, look, I mean, I got married and I've got a kid, and I bought a 2-bedroom. Now we need a 3-bedroom. I'm moving up. I'm moving closer to work. Just give me the story that makes sense. And then the answer is yes.
We have a question from Ken saying, for the VA condo approval, is it only for one condo or the building?
It's the building, the whole complex. Yeah. Once I get that building, that complex, that HOA approved, any other lender after me can lend in it, in every unit in there.
I have a question, Andrew. The VA funding fee. Does it change every time if you have not used your VA or it's paid off? Does it go back to the original? I know that it's different, but under what circumstances?
Yeah. So that's a kind of in the weeds question. So, but it's and all that. So that's why I didn't go into the details of it. But to answer your question, Julie, it is different for active duty than it is for guardsmen, and it is different for subsequent use. And so if it's the first time you've ever used your VA loan, the VA funding fee is 2.15%. And but although you're not required to make a down payment, if you put 5% down, the VA reduces the funding fee to 1.5%.
Oh.
And if you put 10% down, which some people do, then they reduce the funding fee to 1.125%. And so there is an incentive. If you put more down, the funding fee is less. Now, the second time you use or subsequent time you use your VA loan, if you do 100% financing, the funding fee is 3.3%.
Yeah, I know it went up.
And it goes up because what the VA is hoping and thinking is that you've sold that house and you've taken that equity and you roll it in as a down payment. If you don't have anything, if you haven't saved by then, maybe a little bit more. So they charge more the second time. But if you put 5% down, they reduce it back down to 1.5 again.
Okay.
So there's a huge savings on subsequent use. They really want to incentivize you
down, they'll keep it at 1.5.
Yes.
Okay.
Last question was, can most lenders get a condominium building VA approved, or
No.
is that no? Okay.
Absolutely not.
Yeah, you got to know what you're doing and take some work and commitment.
I'm telling you that if there is 100,000 licensed loan officers in this country, there's probably about 200 that know how to do that.
Yeah.
I'm serious. Like that is like no.
Yeah.
Most people have no idea that you can even do it, let alone how to do it.
Hey, Andrew, you got 1 million plus people out there, servicemen. I'm just curious, do most of them know the benefits of VA? Are they taking advantage of it?
No, I think there's better information out there today than there have been in the past. But no, I would say that most I think today most service members know conceptually that there's a VA loan program, but they end up getting misguided by misinformation, which is what I hope I dispelled here today.
There's not a military class or whatever, or some sort of educational program on the out or any time throughout the process.
No, not really. Most
Andrew.
Yeah, most people don't really get that class until they're getting out and they're going through what's called TAPS, Transition Assistance Program, and there's some classes in there, but they're taught by a volunteer who is not a VA loan expert, who kind of just gives the highlights of the benefits of the program, but not the nuances.
I'm just thinking, because we have a lot of veteran real estate agents, it would seem to me such a great market, because I know veterans are very loyal. USAA, for instance,
sure,
or Navy credit, or federal, or whatever.
You said it, not me, but
right, whatever. But they're very loyal. And if you provide good, accurate information, you got a client for life. And I think there's a massive delta of information out there.
Yeah, look,
good opportunity here.
This is what I would say. USAA and Navy Federal are good companies, man. I mean, they do. I mean, I've worked with both. I don't, but they're big companies, and so you're just not going to get the personal attention, right? You know, like when
it's a gamble.
It's just,
every time you call in, you get a different person.
You get a different person,
or you can call and get Andrew.
Yeah, and you're just, you know, most of the people at those larger institutions, what they know to tell you is what's on their screen, right? They're not reading through the guidelines. They haven't necessarily come across all these nuances and these different circumstances or what the exceptions are to get around them. And when they get off the phone with you, they got a line of 150 people on the call queue behind you. So it's like,
next,
it doesn't work. Like here's a big difference. The way I would summarize it is like you, like as a real estate agent, I'm incentivized to do a good job because my entire business and livelihood depends on doing a great job for this client so that they then refer their friends and family members to me. I'm vested in the success of this loan. And I would just say that like an employee of a large institution, they may care. I'm not saying that they're good companies, but again, they got 150 people in the call queue behind you. So it's like
they're on salary.
They're on to the next, you know.
Well, here's what I do know.
You're getting paid no matter how they treat you, where Andrew's going to do the best for you and for your client because he's incentivized to get paid.
We don't know them. We know you, right? So let's just go with that. Dude, I appreciate you coming on. We're going to share this everywhere. This is so good. I mean, it's a tip of the iceberg stuff. There's really a million questions here, but we go forever. Let's not do that. But can we do this? Can you put your info, Mark? Can you let him put his info up there one more time? Do you have it available to you?
It's still up. Yeah.
All right. So if you're a veteran, know a veteran, or has friends with veteran, whatever, this is a big thing because everybody should get a home. It's forced savings. It's all that stuff. And you can use this stuff to become extraordinarily wealthy, especially when there's no caps. Buy a property, live in it, go buy another one. Is that fair to say? We
Zero
can do
down.
that, Andrew?
Absolutely. Yeah.
Yeah. And then just start building it the way every other investor does. But every other investor doesn't get zero down. You still got to be smart and buy the right property, of course. But
zero down and no loan limit.
Use this to your advantage. And we're going to spread the news. If you have questions about VA stuff, call Andrew. He'll get you. If he can't do it, well, then
it can't be done.
Find a different property.
I'm telling you, if I can't do it, it probably cannot be done. I mean, where I'm at right now, I mean, I think we deliver the purest version of the VA program with few, if any, overlays, and that's pretty rare in this market.
And he cares. Not everybody cares. We talk about it. Figure out who you are, and you'll attract your people. The veterans are your people. Is that fair to say?
That's it, man. I mean, I fought for my brothers on the battlefield, and my new purpose and passion is to fight for them, to help them realize that dream of home ownership and to own a piece of the country that they defended. And I just want to make sure they take advantage of this benefit and get a fair shake at it.
Get your people to them.
Yeah.
All right. That's what I got. Anybody else got anything?
Excellent stuff. We're gonna, hey, if we pack up a bunch of veterans that want to get into a house, you'll jump on with us.
Oh yeah, absolutely. Yeah. And if you're on this or whatever, just, again, just take your picture, the QR code there, email me, and I will share the slide deck with you if you can
So
go back
good.
through it.
Excellent.
If you're a real estate agent, this is vital. I would do that. All right, guys. Andrew, can't thank you enough. Thank you.
Thank
Right.
you.
Everyone else, we'll see you tomorrow. Let's go to work.
Thank you.